Welcome to Explain the Charts, where we delve into the intricacies of financial markets and break down complex chart data for you. Today, October 17th, 2024, we're focusing on the SPY, the S&P 500 index. Recent headlines paint a picture of a strong market with record highs being achieved. The Dow Jones Industrial Average and the S&P 500 have both reached new highs, with Nvidia leading the charge. Chip stocks have been performing well overall, fueled by investor optimism surrounding AI chip demand. Banks are also seeing positive momentum, with Morgan Stanley reporting better-than-expected earnings. Earnings season is underway, with a slew of corporate earnings reports being released. Investors are eagerly awaiting the Federal Reserve's decision on whether to cut interest rates again. Some analysts believe that the recent job report and data showing sticky inflation may suggest no rate cut in November. Retail sales data later this week will be a crucial indicator of the economy's resilience in the face of Fed policy. Gold prices are on the rise, likely driven by expectations of another rate cut in the November meeting. Crude oil prices have dipped slightly, which may impact energy stocks. Overall, the market sentiment is cautiously optimistic, but there are still some uncertainties. Let's now turn our attention to the charts and see what they reveal about the SPY. Taking a look at the daily chart of the SPY, we immediately notice a strong upward trend. The price action over the past several months has consistently broken through previous resistance levels. This suggests a bullish momentum and a potential for further gains. The most recent daily candle closed with a slight decline, which may be a sign of consolidation after the recent rally. However, it's important to note that the candle closed above the 200-day moving average, which is a significant support level. This indicates that the bulls are still in control and that the market is holding its ground. The current price level is near the all-time high, making it an interesting area to watch for potential reversals. Let's zoom in on the 1-hour chart to gain a more granular perspective on the SPY's price action. Here, we see that the recent rally has been characterized by a series of strong green candles. These candles suggest a steady buying pressure and a persistent bullish momentum. The most recent hour closed with a slight dip, hinting at a possible temporary pause in the upward movement. However, the price is still trading above the 20-period moving average, which is a short-term support level. This suggests that the bulls are still actively participating in the market. Looking at the 15-minute chart allows us to examine the most recent price action in detail. We can see that the price has been fluctuating around a specific price level, exhibiting a sideways trend. This sideways movement suggests indecision among traders, as they are unsure of the direction for the next move. The presence of smaller green and red candles indicates that the bulls and bears are engaged in a tug-of-war. The volume is relatively low, suggesting that the current consolidation phase is likely to continue. The price is currently hovering near the 20-period moving average, which could act as both a support and resistance level. Comparing the 15-minute chart with the 1-hour chart reveals an interesting correlation. While the 15-minute chart is showing a consolidation phase, the 1-hour chart is displaying a bullish momentum. This suggests that the overall trend is still bullish, but the market is experiencing a short-term pullback. The price action on the 15-minute chart could be attributed to profit-taking from recent gains, as well as anticipation for upcoming economic data. This consolidation period could provide a valuable opportunity for traders to identify potential entry points for long positions. The news headlines provide some context for the market's current state. The strong performance of chip stocks and banks is reflected in the SPY's upward trend. The upcoming Federal Reserve decision on interest rates and the release of retail sales data could have a significant impact on the SPY's direction. A rate cut would likely boost the SPY, while a pause or increase could trigger a sell-off. Strong retail sales figures would further support the bullish momentum, while weak numbers could create downward pressure. Let's examine the SPY's chart data more closely to identify key price levels and potential trading opportunities. On the daily chart, the 200-day moving average remains a crucial support level. The price has held above this average for several months, suggesting a strong underlying bullish sentiment. A break below this level could signal a shift in momentum and a potential bearish trend. The recent peak near the all-time high acts as a potential resistance level. On the 1-hour chart, the 20-period moving average provides a short-term support level. The price has bounced off this average on several occasions, demonstrating its importance in the current bullish phase. A break below this level could indicate a loss of momentum and a potential short-term pullback. On the 15-minute chart, the 20-period moving average acts as both a support and resistance level. The price has been fluctuating around this average, indicating a sideways consolidation phase. The current range between the 20-period moving average and the recent peak provides an opportunity to identify potential entry and exit points for scalping strategies. However, it's important to acknowledge that this sideways movement could be a precursor to a larger breakout in either direction. The direction of the breakout will depend on the upcoming economic data and the Federal Reserve's decision on interest rates. To further enhance our analysis, let's narrow down the 15-minute chart to focus on the past 24 hours. This will allow us to observe the price action during a period of potential consolidation after the recent rally. During this time, we can see that the price has been fluctuating around a specific range, exhibiting a sideways trend. This sideways movement suggests indecision among traders, as they are unsure of the direction for the next move. The presence of smaller green and red candles indicates that the bulls and bears are engaged in a tug-of-war. The volume is relatively low, suggesting that the current consolidation phase is likely to continue. In conclusion, the SPY is currently in a bullish trend with the potential for further gains. However, the market is experiencing a short-term pullback, as evidenced by the consolidation phase on the 15-minute chart. The key price levels to watch are the 200-day moving average on the daily chart and the 20-period moving average on the 1-hour and 15-minute charts. A break below these levels could signal a shift in momentum and a potential bearish trend. The upcoming economic data and the Federal Reserve's decision on interest rates will be crucial in determining the SPY's direction. Traders should keep an eye on the volume and the price action around these key levels. A strong surge in volume accompanied by a break above the recent peak could indicate a continuation of the bullish trend. On the other hand, a significant decline in volume combined with a break below the 200-day moving average could suggest a bearish reversal. Overall, the SPY presents an interesting opportunity for traders to capitalize on both short-term and long-term trends. By carefully analyzing the news headlines, chart data, and key price levels, traders can make informed decisions about when and where to enter and exit the market. Remember, it's crucial to manage risk effectively and to always adapt your trading strategies based on the evolving market dynamics.